Good morning and welcome back to the channel. This video is not financial advice. I'm not a financial advisor. Do your own research, make your own decisions. All right, guys, this is a very important story in my opinion. I don't think that it will get covered like that because there's so many other crazy things going on. But I think this is indicative of what's to come. And we're at the stage where if they do nothing, right? They don't print any more money. They just sit on their hands, the federal government and the Fed. The bond market implodes, the stock market implodes, the housing market implodes, and apparently a lot of pensions go bust. So that's where we're at. That's where we're at right now. Just want to put that into context. Now, essentially what this is there is a federal agency called the Pension Benefit Guaranty Corporation, and I highly recommend you read all this on your own, but that federal agency provides partial protection, which they don't really clarify what that means, which I'm going to give you my thoughts on that, but this agency provides partial protection for 10.9 million active workers and retirees. It doesn't break down how many of the 10.9 million are still active workers and how many are retirees, but that's the number. So it's not an insignificant number, all right? So this federal agency is set to go bankrupt, or is set to be insolvent by 2026, meaning that so in between this federal agency and all of these individuals, you have all the multi-employer plans that, each of these individuals, their pension is on one of these multi-employer plans. All right. So whenever one of these multi-employer plans manages their funds so poorly that they can't adequately compensate those individuals, that's when this agency steps in to make up the difference. That's what it seems like. All right. And that's kind of how they have it laid out, but they're very vague in general here. So you have, some multi-employer plans that have managed their funds so poorly that they can't adequately compensate those individuals. And this agency provides that partial protection. So I assume the partial protection is different in every single scenario, depending on how much they need to make up the difference. That's what it looks like. So they've provided so much partial protection in recent years that they're set to be insolvent by 2026. Now, if they're insolvent, they're more or less the insurance on all of these pensions. And so if they're insolvent, you're talking about 10.9 million individuals no longer having the federal government backstopping their pensions. And if something goes wrong with the multi-employer plan, whoever's managing those funds, then it is what it is. That's where we are. I mean, this is, and what this is going to get passed, and I already heard people saying this, they're just buying union votes for the fall, and that may or may not be true. But that's the situation if they don't do this, is the agency that essentially makes up the difference for a lot of these pensions. If they go insolvent, that's, guys, there's really the system this is not a real system, okay? And it's like we're in a boat and there's just holes, there's just water, there's just big holes all over the boat and there's just water flooding out of everywhere. And their only solution is money printing, more or less. And they're going to continue to have different things come up, right? If they don't do anything, the bond market's going to spike. That's going to become a problem, and they have to immediately deploy capital to fix that. Same thing with these pensions. Same thing with everything else for the most part. So, same thing with corporations. We know they're sitting on a $250 billion bill solely for the tech industry, $50 billion for semiconductor manufacturers, and then $200 billion for tech research and development, which they don't ever explain what that means. Now, this is currently being held up by McConnell, or McConnell says that the Republicans aren't going to green light the Democrats adding more spending into this. So that might hang it up for a couple weeks, maybe a month, whatever it might be. But this is probably going to get passed, in my personal opinion, because the Micron CEO went on TV yesterday to say again, well, actually, this is the first time I've heard him. I've heard all the other CEOs go on TV, but he said the very same thing. They have to get this finished. This is a matter of national security. If we do not manufacture semiconductors here, these things run everything. And if we don't do that here, this is a national security issue, more or less. So it needs to get done. So I think that it is going to get done. And again, there's 200 billion in there that just, they don't really specify what it's for or who it's for, just for tech research and development. So guys, the only, they could very easily just let the system blow up. Okay, the Fed doesn't have to buy bonds. They can let bond yields spike. The federal government doesn't have to approve this spending. They can let pensions go bust. And see, that's what would happen if they do nothing. If they do nothing, that's what makes this entire conversation so difficult. When people are trying to analyze what's coming, where we're at, bear market, bull market, the next 6 to 12 months, it's so difficult for people to be able to analyze, because you're trying to guess what it is that they're going to do, not what the free market is, not what the free market's going to do and how that's going to unfold, because that's not the situation that we're in. We're in a situation where a small group of individuals, their decisions that they're going to make are going to be, what causes all these other effects. And so you're trying to guess and assume what it is that they're going to do. That's why it's so difficult to be able to provide any real analysis to the situation that we're in economically with financial markets and everything else. All right, so that's the situation. Now it breaks down so these multi-employer plans that are in trouble and they can't adequately pay out those retirees. Those multi-employer plans can apply for special financial assistance to the PBGC, and then the PBGC gives them those funds, but there are specifications on how those funds have to be allocated, whether it be to equity-based products, bonds. But so a lot of these multi-employer plans are about to start applying for additional funding through this agency. This agency is going to give them the funding, and then they are going to invest the money within the guidelines of how they lay this out. So just know that that's where we are right now. All right. Yeah, that's where we are. And guys, again, anyways, that's pretty much it. I just wanted to go over that. And in my opinion, this is indicative of what's to come. This is the first. Think about this. This agency was going to go insolvent. Actually, I always go over the most important part last, after half the people stop watching. But this agency was set to go insolvent by 2026. So they're now going to be funded through 2051. An extra 25 years of funding. How much? You couldn't even put a number on that. You can't put a number on how much funding they're going to need, because you can't predict how many of these multi-employer plans are going to have issues and not be able to adequately pay out all these retirees. So there's no number that could even be put on this. Now, on top of that, you have to account for inflation and everything else. There's no number that can be put on this. You're talking about the main agency that financially protects 10.9 million different individuals, their pension payouts. That's more or less what this is. So this agency set to go insolvent by 2026, but instead they're going to be funded for another 25 years on top of that, into 2050. How much money do you think it would take to do that? I have no idea, but I think it would be a sizable number. And again, you can't even quantify how much that would be, because you don't know what type of situations these other multi-employer plans, now they have their backstop, right? Now they have the money printer behind them funded and ready to go for the next 30 years. So this whole system isn't real. It's all fake. It's all bullshit. They can do whatever they want to do. It's very difficult. The rules can change at any point in time. And that's the situation that we're in. So what I have seen from them is, what it looks like to me is that, yes, I 100% anticipate, and I think that we're already in it, there to be a period where asset prices have to deflate. They get so overblown that demand just falls off of demand destruction, more or less, and prices have to come down. But when I'm looking at this big picture, the next 3 to 4 to 5 to 10 years, I just see more and more dollars being produced. That's I'm looking very, very simplistic. They have to find new ways to print more money. Greg probably nails this better than anybody. Is they have to, in the debt-based system that they currently have set up, especially with what's going on with the bond markets and with the debt markets right now, they have to create more money. If they stop, the system implodes. There's no ifs, ands, or buts about it. They can maybe stop, the Fed can maybe reduce its balance sheet for a period of time, right? The US government can maybe, cut back on spending for, a short period of time, but it can't last. It can't last. The system has to be fed with more and more and more debt, or everything just implodes. So that's where we are. That's really all I have for this video. I don't know how helpful this was. I recommend you reading this on your own, but whatever number, if they give a number as far as how much this is going to cost, I'm not going to believe it, whatever it is. Unless it's in the trillions, I'm not going to believe shit that they say about how much this is going to cost, because that's how much I think it would cost. I mean, just in a general sense. I mean, you're talking about the federal agency that backstops a lot of these pensions. They're set to go insolvent in the next few years, but instead we're going to fund them for the next 30 years? I assume the reason that they're set to go insolvent is because they've had to provide so much partial protection for all these different pensions over the years that they've now just run out of money. And so they're going to be funded for 30 years. So that's where we are. That's all I have for this video. Let me know your thoughts in the comment section below. If I got anything wrong, let me know in the comment section below. I recommend you read this on your own. I will catch up on everything else tonight, tomorrow, sometime in the next day or two. That's all I got. Take care. Have a good day. I'll see you in the next video.